right, so number one, we've just got the jobs data out here. I do want to go and talk about it because this is interesting, folks. This was a Goldilocks number. All right, so we saw the payrolls coming in at 22,000 versus the 75,000 estimate. Now, you might say, oh, that's weaker than expected. Why is that Goldilocks? Because the market wanted slightly weaker. Slightly weaker ensures that we're going to get that rate cut in September and likely more rate cuts in the remainder of the year. Remember, markets crave cheap money. They want that cheap money. It keeps the printing presses going. Now, again, I don't necessarily pertain or subscribe to these type of things in terms of fake numbers. But I will say this, folks, is that number one, this was the perfect number to keep the rally going today. Number two, the BLS website that reports these numbers was suspiciously down for a few minutes prior to the release of the number. Now, listen, we'll have to see how it all pans out. The markets usually are pretty good at sniffing out things like this, but I did think that was interesting. All right, unemployment rate stayed the same at 4.3%. No change there, which again is perfect. The market loves it. And the participation rate actually inched up by 0.1%, which again shows a slight positive. So you got your weaker labor number, but notice how the labor number wasn't negative. If it was negative, the markets would start to panic. This was the perfect number for investors. The first thing we want to do is see what the market is pricing in terms of rate cuts. So let's flip over to the website here. Let's scroll down on verified investing, and we go all the way down to the number where we keep tabs on the Fed watch, which is basically the predictor of what the Fed is likely to do. And if we click on that, look at this, guys. The markets are now pricing in 3 rate cuts into the end of the year, 1 at every meeting. Here's September, rate cut in September, rate cut in October, and rate cut in December. All right, so again, when I talk about Goldilocks, numbers, this is why this number was a Goldilocks number, because it literally gave us those 3 rate cuts that the market is now factoring into year end. It was just weak enough on the right side to get people to say, okay, this gets the Fed off of their seat. It gets them cutting 3 times into year end. So what we saw here is this underbelly trend line, right? Kept on hitting. We opened below on Tuesday. Remember, we came back from the 3-day weekend. There was some fear out there. The markets then recovered, essentially closing on the trend line. And sure enough, we got right back above the next day. And lo and behold, yesterday we had a strong rally. Now, whether or not these numbers got out to certain individuals ahead of time, we don't know. But nonetheless, the market obviously was pretty optimistic going into the jobs report. And it turns out very well to do that, right? And then today we're looking at a gap up right around here, give or take. So we'll be opening up about 30 points higher here in this range. All right, so this will be at a new all-time high on the S&P 500. But this is the kicker, guys. We move this arrow over and we have a distinctive resistance level that we'll be watching. If we bring this into focus, that's at around $6,565 on the S&P. All right, so again, if we were to push up into there today, I'd actually expect a pullback next week. But again, I do think at this point the markets want to reach for that level. Again, target on the S&P is 65.65. The Nasdaq got a affirmative close below the trend line. But again, if you've been following me, we know that we don't just look for a close below, because too many times the markets will fake us out, or institutional money will fake us out. We want confirmation of the breakdown. The answer here is it never gave us confirmation. So essentially, it was the classic fake out rug pull of a breakdown. We went up the next day. Yesterday, we closed back inside of the parallel. And today, we are trading on the QQQ around just under 581. Not at a new all-time high, mind you, versus the S&P. The S&P will be at a new all-time high. The QQQ will not be, which continues to show a little bit of weakness in the Nasdaq. Now, if we do push up, where's your first resistance on the QQQ? Double top right here. And again, I would in general assume that that double top will coincide with this level up here on the S&P 500. That's my guess, at least. looking at where the data sits and the charts sit. So we should hit resistance basically on both the Nasdaq 100 and the S&P 500 essentially on the same day, probably around the same time. All right, so again, we're watching to see what happens here, but right now it looks like a nice 1% move up on the Nasdaq. Keep in mind the Nasdaq is being driven by Broadcom. Now look at Broadcom. Epic move, 15%. This company was valued at $1.4 trillion before this earnings report. It basically was flat for the first 30 to 45 minutes after it reported earnings, and then the guidance really started to power pressure wash or push it up substantially here. And this is the key. Look at this trend line, guys. It has now hit my short level for the day. If we zoom out on the daily chart, take a look at this level right here. Anything between 350 and 353 to me is a great potential day trading short level up here for a pullback into the open or at the open. All right. So again, look at the trend line. You're taking your highest pivot from June 2024 to your highest pivot from December 2024. And we are now above 350. So we're now in that zone of this upsloping trend line. Now, one of the interesting factors, and we're going to get back to the 10-year yield and the dollar because I do want to look at those, but one of the very interesting things here is that while Broadcom, which is a chip AI stock, is going substantially higher, Nvidia is actually selling off. And so I almost speculate that there's some money that is saying, wait a minute, Nvidia's gotten a little too far ahead at a $4.5 trillion valuation. Let's rotate capital from Nvidia and put it in Broadcom. That's my guess of what is happening today. And if we flip back to the charts and flip over to Nvidia, look at Nvidia. Just selling, selling, selling. I mean, it's getting a little bounce here in the pre-market, but this stock was down over 2% at the lows, which again is pretty substantial for a market. Remember, the market and the Nasdaq are up substantially this morning. So to see Nvidia weak, there has to be something there, maybe a potential passing of the guard on the charts or on the two AI stock leaders. Now, if we look at the daily chart of Nvidia, what kind of pattern formation is this starting to make? It's starting to make a bear flag. And so what you're seeing here is bear flag formation and then potentially a rollover. I still have it priced in that Nvidia should fall to approximately the 153 level, former pivot highs. And again, that's really not that far away. I mean, percentage-wise, if we look at this and measure it out from the close yesterday, that's about a 10% drop. Wouldn't happen in one day, obviously, probably a compilation of multiple weeks. But I do think eventually Nvidia comes in here and hits that level.